Folks, that's the reason why we remain bullish on tankers. Another reason is that they're damn cheap. And I said, you got to take the highs and lows. It's just not bloody, you sit there going, oh my goodness. Problem was they weren't expensive stocks going back 6 months, and they're even cheaper than cheap now. So we're holding our positions and we are taking it like a man. You take the highs and lows, so we're doing exceptionally well with Argentina, which is sort of more than offsetting the problems we have with shipping. So we'll just take Frontline as a sort of proxy for shippers or tankers. Well, we invested in Frontline. Actually, it was pre-COVID, Chris, wasn't it? We bought more in COVID. We've done about it. So if you look at that in terms of you take the dividends, you reinvest them. We performed exactly that. That stock's performing exactly in line with the S&P 500. The S&P 500 is up about 180% since in 5 years, just like Frontliners. Of course, going back a few months, it was up somewhat more. Its prices have got absolutely smacked as of late. Now, that is largely to do with expectations of demand from China. There's been a decrease in demand for oil from China, but a lot of it's also based on what they think is going to happen in the next 12 months. But here's our sort of predicament. Okay, so this is the key metrics for Frontline. So the actual P is about 5.6, 6 times. Forecasted next year 7 times, and years after that like 5 times. Look at dividend yield expectation. Well, current dividend yield 14%, based on what analysts expect shipping rates to be, tanker rates. Well, there we go, 14 times dividend yield next year, years after that 20 times, or 20%, I should say. These are not that kind of, the problem was they weren't expensive stocks going back 6 months, and they're even cheaper than cheap now. So we're holding our positions and we are taking it like a man. Now, here's probably one of the bigger, the primary reason why we're sticking to our bullish perspective on tankers. The fleet is aging. Take a look at we're trying to, I think we explained this in this week's weekly coming
I think
up.
we've said this over and over for the last 6 months.
You know what? I'll say it again.
I've seen this chart so many times.
Yeah, that's fine. We'll say it again. Maybe, repetition is penetration. The problem here is that about 15% of VLCCs, so that's percent above 20, that one there, about 15% of VLCCs are over 20 years of age now, and 33% are above 15 years old. Now, the 20-year level is generally anything over 20 years is making its next appointment, next shipping route is towards a beach in Bangladesh. They tend to get scrapped after 20 years. Okay, now if you look at the order book, so 6.7% of the current fleet the orders have picked up, yes, but they're nowhere near they're only half of what the scrapping rate's likely to be. So if we go to, that's VLCCs, and you go on, look at other ones as well. So look at the actual bar charts. If you assume that those vessels above 20 years are going to be scrapped, so you take a look at in like next year, 131 vessels are likely to be scrapped. One vessel will be built. Oh, that's this year, 2024. 2025, 29 scrapping, 5 being built. Assuming again, this makes an assumption that those vessels 20 years and above will be scrapped. And so there we have this deficit. And way more as time goes by, that fleet's going to get older and older. So this is why, and so we think that there's going to be a deficit of shipping capacity. So we're bullish more from the perspective of reductions in the supply of tankers as opposed to demand. We do think demand's going to pick up in China, but just leave that for a side. Folks, that's the reason why we remain bullish on tankers. Another reason is that they're damn cheap. And I said, you got to take the highs and lows. It's just not bloody, you sit there going, oh my goodness, bang, 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 day after day, down, down, down. Look at the chart of Frontline like the last, 6 months. It's not amusing. That's why, like the Argentinian positions is up like 400%. It's like, yeah, we go, yeah, okay, well, fine. Yeah, that's cool. Whatever. We're not spruiking it. We're not going the best things in the sliced bread because we know damn well this sort of shit's going to happen. We're going to have some sectors that pull back and make us look like idiots. Thank goodness for our asymmetry.